Hello again, everyone. Thank you for being here this Sunday night or Monday morning, depending on where you're at. I'm going to be taking a look at a few things, including making our way over to the U.S. debt clock. And I'm going to compare a few things that we see today and that we saw last year or a couple years ago. And it's pretty interesting. We'll be taking a look at a few things from Gerald Celente's Trends Journal, revisiting the Lynette Zang interview, as well as the Gary Wagner interview, and going over the debt ceiling, which is coming due at the end of this month. By the time I see you guys next week, we're going to see what happened with it. Did they raise it, suspend it, or just kind of glance over it before they go into their August recess? Excuse me. So, again, thank you all for being here, and I'll be with you shortly. Michael Sayer, I see you out there. I'm going to have one of your tweets in the bookmarks because I do think you're absolutely spot on with what you said. So I'll be with you guys shortly. Hopefully the audio is coming in okay for you folks if it's loud enough, and I'll be with you soon. Hang on. Hello again, everyone. Excuse me. Welcome to another edition of Silver Bullion Television (SBTV). This is our weekly live stream, and glad you are here. Whether it's your evening or your morning, thank you for being here. Quick roll call. Carrie Ellen Wilder. Yes. What happened? Ed Bland. How you doing? First time I've seen your name here. Welcome aboard. As always, if you are new or first time here, go ahead and type in new and where you're from, and we'll see if we can acknowledge you. James Richter, a stalwart. How you doing? Frank Cerveni, first time I've seen your name also. Welcome aboard. Michael Sayer, I'm going to use one of your tweets, as I mentioned. Pablo Pina, how you doing? Jack P. Okay, thanks for the feedback. Peter Shoot, State of One, how you doing? Hope smooth seas are out there for you. Smooth seas, my friend. Patrick Bateman, greetings and salutations. So yes, welcome, welcome, welcome. Yeah, hello, Vincent. Yeah, we got to get a hello out there for Vincent. Vincent's always here on standby, and you guys never see him. But one day I'm going to put him in front of the camera, and you will see him. So make sure to say hello to Vincent as well. Vincent, how you doing? Hope your morning's okay. Let's see, Jay Delaney, the MiG 26. Aloha, how are you doing? Let's see. Okay, not wrong. How you doing? How you doing there? Good to see you again from KL. Let's see. Belly Dance, Tweety Bird, Ed Bland again. All Strong LLC. Okay. New. That's a new name as well. Welcome aboard. Broward Person. There you go. How you doing? Hope things are okay in Florida. Welcome aboard. Let's see. Okay, and Nomad, Mr. Nomad. Hello from the Eastern Sierra. Interesting. Eastern Sierra. Okay. So just want to take a quick time out here to make sure I say hello to everyone. And again, as always, welcome aboard. Glad you are here. And if it is your first time, or if you haven't already done so, do subscribe, do subscribe, do subscribe. Hit that bell to be notified. And again, thumbs ups are always appreciated. Those are perhaps the biggest thing that you could do to help support us. So we always do appreciate those. And as always, you can find us on social media. Silverbullion.com.sg is our website. As probably all of you know, yes, we are a bullion dealer. We do sell silver and gold. We do store silver and gold, platinum, palladium, including even other things like nickel. But more than, let's say, a bullion company, we do specialize in wealth protection, systemic wealth protection. And as I say, week in and week out, we all need options. And those of you out there who already know what's going on, you do know that you are going to need these options, and you need to have as many options as you can. And one of them is understanding what systemic wealth protection is and where we are today, with especially what's going on with all the money printing and all the debt that's going on. Silver Bullion SG is our Facebook handle. That's where you can find us there. Silver Bullion PL is where you can find us on Twitter, PL for Private Limited. Instagram, Silver Bullion SG. Instagram's getting pretty interesting, so hope you folks have some time to make it out there. Audio versions, bit.ly, SBTV iTunes, or SBTV Spotify. And if you do have that if you do have that Telegram app, search for Crisis Tracker, one word. And this is where we go ahead and we put out maybe 3 or so posts a day as it pertains to gold, silver, the economy, finance, things like that. And, we do definitely try to validate the sources, make sure the news and info is good. We'll put it out there and we kind of go through the weeds for you so you don't have to. So, again, it is a growing group, and we do hope that a lot of you do continue to add us in Telegram, Crisis Tracker, one word. So, again, as always, aloha and welcome. We appreciate you all being here. Upcoming guest, a little bit different. We're going to head over to the mining space for our upcoming guest, and we're going to have on Brett Heath. Now, Brett Heath, he's the president and CEO of Metalla Royalty and Streaming Limited, and we'll ask him, what exactly is a royalty company? And Brett was previously heading High Stream Corporation before Metalla, before Metalla acquired it back in August of 2016. And he has a long career in corporate finance and the investment management industry. So Brett Heath, I'm sure we'll get some good info out of him. And I definitely look forward to that one. So moving over, our appreciation for you to our ebook thank you giveaway. Again, the answer is going to come from last week's interview with Lynette Zang. So I do hope you had a chance to watch that interview, and we'll play a few clips from it. But this week we're going to be giving away Murray Rothbard's book, The Case Against the Fed, the most powerful case against the American Central Bank ever written. And this work begins with a mini treatment of money and banking theory and then plunges right in with the real history of the Federal Reserve System. And Rothbard covers the struggle between competing elites and how they converged with the Fed. This is true. Now, Rothbard calls the abolition of the central bank and the restoration of the gold standard, or he calls for it. And his popular treatment incorporates the best and most up-to-date scholarship on the Fed's origins and effects. So it is an interesting book, and I do hope you take a swing at it. Take a chance, try to see if you can get it. It is very interesting. So if you'd like to get it, house rules: download that Kindle app from your phone or tablet's app store and be one of the first 5 to answer correctly during this live stream before the timer runs out. You're going to have about 1 minute and 30 seconds. And U.S. winners, you're going to be given a link to download the ebook. Non-U.S. winners, you're going to have to contact Amazon and ask them for some type of an exchange for that ebook, perhaps something like a gift card. And again, the reason being, Amazon, they do not give Kindle ebooks as gifts outside of the U.S. So that's the reason why. And you're going to have to provide us an email during this live stream. So what will happen is my colleague Vincent, he is here. He will go ahead and mute your comments, and then you can just send your email only. Just send the email, and that way nobody will see it except for us. So again, if you'd like to take a swing at it, the answer or the question is going to come from Lynette Zang's interview, or that's where the answer is going to come from as well. So I do hope you had a chance to go ahead and take a look at that interview. Just want to take a look at the comments real quick before we move on to that question. Good vibes. Yes, good vibes always. Let's see. Mr. Nguyen, I'm seeing that comment. Yeah. I'll just throw this up there. If you could explain, that would be a good one. It's interesting. Let me see what else is out there. Let's see. Yes, absolutely. Peter Schutz, Murray Rothbard is a legend. Okay, so having said that, let's just get on to the question. The question pertains to last week's Lynette Zang interview. And it is, according to Lynette Zang, it only takes pressing a button to create paper silver, although to get physical silver to process it out of the ore, the rock, it takes blank and blank. Blank and blank. Okay, so according to Lynette Zang, what does it take to get physical silver out of the ore? It takes blank and blank. So go ahead and take a shot at it. Let's see. Okay, so answers are coming in: time and labor. Okay, that's the first answer. Let's see what else is out there. According to Lynette Zang, to get physical silver, process it out of the ore, the rock, it takes blank and blank. Okay, so we got some answers coming in here. Let's see. Okay, so I'm seeing time, labor. Let's see, children of men. Okay, let's see what else is out there. Um, okay, hang on, just looking at it. Time, labor, children of men, energy, labor and energy, people and energy, time and effort, energy, labor. Let's see. You guys are some pretty good answers there. Appreciate that. Okay, so let me see now. Um, okay, well, time's up. I think a lot of you guys got it, but we're going to take the first five, and the first five being, hang on, let me check one more. The answer was actually labor and energy. So let me just make sure that we have the first five that said it. Um, okay, so here we go. Sorry about that. The winners, it's going to be a silver warrior, energy and labor. Okay, James Richter, labor and energy. Okay, and Michael Sayer, energy and labor. Saw you take two pokes at it. Good job again. Harold B, energy and labor, and Nick Nasty, people and energy. People, yeah, you can pretty much take that for labor. I mean, you can't have labor without people, right? So these will be our five winners again: Silver Warrior, James Richter, Michael Sayer, Harold B, and Nick Nasty. So congratulations to you all. We'll go ahead and get those ebooks out sometime after this live stream. So again, good job, good job. So according to Lynette Zang, um, it takes labor and energy, and we'll go ahead and we'll play that clip just to confirm. So we will revisit our interview with Lynette Zang.
There's a finite amount of this. That's it. This is just a 1 ounce silver round. And there's a finite amount of that. There's an unlimited amount of paper. I mean, $26 an ounce. Give me a break. I appreciate it because I could just keep buying it at severely undervalued levels. Thank you, central banks and banks and manipulators. And the Reddit trade is attempting another run at silver. But as the talking heads on CNBC said the other day, there's so much silver out there. Oh my God. They're idiots. Oh my God. You can
Yeah.
create an unlimited amount of piece of paper if all you have to do is push a button. But this takes work. And depending upon the form, this is actually a rock in which there's gold and silver. They've got to process that to get it out of that rock. It takes labor. It takes energy.
All right, so there you go, labor and energy, and this is true. We've had guests who tell us this in that it takes labor. I think Steve St. Angelo is probably the most famous, where he does tell you it takes energy. It takes labor, it takes energy to produce physical gold and silver. On the other hand, though, it takes pretty much nothing to produce paper gold and paper silver. And that's the problem. No one with any kind of power tries or pushes to resolve this. Yet, this problem is one that will surely come back, and it actually looks like it is trying to circle back. And when the house of cards does fall, the pillars of silver and gold will remain standing firm and in truth. And truth always prevails. Lately, it's been taking a long time to prevail, but the truth is out there. Truth will prevail. Some more from Lynette Zang.
I like gold. I like silver that have been around for thousands of years. lived through the test. And part of it, for me, I look at the base of buyer. And both physical gold and physical silver, not the contracts, but the physical, they have the broadest base of buyer because they're used across the entire global economy. And, keeping in mind that in Europe, gold has now been, and it should have always been there, raised to a tier one asset because it is, according to the Bank for International Settlements, not me though, I agree, it is the only financial asset that runs zero counterparty risk. And when held at home, does not even run any political risk.
All right. So gold and silver lived through the test. It's lived through the test time and time and time again. The physical gold and silver have stood the test of time. It's the only financial asset that runs zero counterparty risk, political risk. Do you folks agree with that? Zero counterparty risk or political risk. And it could be because, again, it is an asset, it is money held outside of the financial system. So, and that's one reason why, it does kind of avoid uh, being caught up with political risk. Now, I do know that, gold was confiscated a while back, but, it does help you with things like instability, political risk. It does help with things like what we're seeing perhaps in Lebanon, with inflation, hyperinflation. So it does absolutely have a role to play. But do you agree? Do you agree? Zero counterparty risk and political risk. So I'm interested to see what you folks have to say out there. MM126 Basel 3 is a joke. I mean, I've said this before. A lot of people have said this before. There were high hopes for it, but I think, in the end, we all kind of knew that, not to expect too much from Basel 3. And I know, a lot of guys were calling for, gold to really spike and these things. And it will in time. It will in time. But, you know, what happened was we saw the LBMA and we saw the World Gold Council. They kind of tamped down a bit and they got some type of an exclusion from being included in Basel 3. So they got their exclusion, and Basel 3, it's a voluntary deal. So again, there were reasons not to expect too much. And on the other side, there were reasons to expect it to actually start to clean up the system a bit. Give it time. Just give it time and we'll see what happens. So MM1 to 6, kind of sort of, there were people who got let off the hook. They had an exit. They definitely had an exit, but we'll see. We'll see how it pans out in time. So one more clip from Lynette Zang.
The current US dollar is created from debt. So I said to myself, well, what is going to be the justification to create the new CBDCs? And from everything that this, number one, it is not easy to find. Number two, the only thing that I've seen that they can use to justify creating them is debt. And that means that they have to hyperinflate the currencies so that they pay off these ridiculous debt levels with dollars in this country, but this is true globally, with fiat money that has no value. We are at the end of this fiat money life cycle, and we need to transition into a new one and reset socially, economically, and financially. And that is painful.
Yeah, so she hit a few things on the head there, and the one thing that stands out is when she talked about the transition, and we've spoken about this quite a bit as well. The transition, you need to have something, some type of asset, some type of store of wealth that can take you from the current system into the next system. You need something that can transfer your wealth, that store of value. And again, this is another, I mean, probably one of the biggest reasons why you want to have something like gold and silver. You want to hold something like gold and silver because none of us here can control this transition, but all of us here are going to be caught up in this transition. So we need things that are going to help us move from here to there, and we need things that are going to help us to find opportunities as they come through this transition. And that's another part of it, because there are going to be a lot of opportunities that are going to come through this chaos. So again, do try to understand this. It is happening, and do your best to make sense of this. And again, as I always tell people, explain it to your spouse, especially. A lot of times you need the whole household, to understand and participate in this. Anyway, nonetheless, the current U.S. dollar is created from debt, as Lynette Zang says. What will a CBDC be created from? Even worse debt? I mean, is it going to be even worse debt, or type of a reset? And we are at the end of this current fiat money life cycle. I think when you just step back and take a look at it, as unimaginable as it might seem, um, paper money, fiat, it's really sort of running on fumes already at this point. And again, we need to have alternative assets. So now I want to move over to our Gary Wagner interview, our Metal Money interview with Gary Wagner. And he also had his take on the Fed and what's going on with the Fed. What do you think the definition of Powell's moderating is, and what do you think he plans to do?
Well, first of all, I think he's using that terminology because honestly, they do not know. As we spoke about pre-show, one of the statements that Chairman Powell made was that they have no experience. It's never been an instance where a government had to reignite an economy, ours $20 trillion economy, after being shut down for a year and a half. So they have no reference to go on. So when they say it's moderating, it is lasting longer and going higher than they originally anticipated. And it's the only really the word usage to kind of not scare the public. But the truth is they don't know. They don't know how long it will last. They don't know how high it will go because, as you said, they cannot control it.
Okay, Gary holding me to my word when he said, "As you said," I was like, "Oh my gosh, what did I say?" Patrick, choose your words carefully there. Gary holding me to my word. But yes, I do not think the Fed will be able to control runaway inflation, as you folks hear me say time and time again. They've been trying to get inflation since 2007, 2008. They've never been able to really get it, well, at least to their metrics. And so my belief is, well, when they do get it, they've been trying for 10 years to get it. What makes them think they can actually control it? They tried 10 years to get it. I don't know if they'll be able to control it when they do finally get it. Nonetheless, as Gary said, it does seem as though they are using carefully selected words not to scare the public. Transitory, soft word. It's not a word often used, but it's, like I say, a soft word to help people take it as, it's just a temporary thing. Don't worry. So the Fed, if you ever listen to them, they do absolutely they have what we call Fed speak. They often speak in a way where a lot of us don't understand. Um, it's their terminologies. So with that Gary Wagner interview, he did give us numbers as far as short-term outlooks for gold, for silver, and those things, and we'll do that in just a bit. Just want to take over take a look at a few of these comments here. Let me see. Uh, Hang on. Let me take a look at a few comments. Hang on. Sorry, I'm just going through this. Silver Warrior, you had issues with the book. I'm understanding. Amazon said it was not available in the U.S. Oh, okay. That's odd, but thanks for letting us know that. Were you able to make some kind of arrangement with Amazon? I mean, I hope everything was okay there with you for it. Let's see what else is out there. Um, yeah, transitory, very very soft word. Okay, so let me All right, so let me move on. I'll play a couple more clips from Gary Wagner, and again, he's going to pull up some charts here, and we're going to go over his opinion, short-term outlooks for gold and silver, and I think he explains it pretty well, so it may be a benefit to us here. In your technical analysis, what do you see happening with the gold price as far as short-term resistance and support levels?
Okay, now on this chart, you have Fibonacci retracements, which begin roughly at 1676 and conclude at 1920. And as you can see, the lows that it hit today just went under the 50% retracement. And just below that is the 100-day moving average at 1791. We did go long this market, and our stop is below the 100-day moving average. And that's because we think that there's major support there. Now, in terms of resistance, we've got a really good band, because if you look at the chart, the 38.2% at 1826 and the 200-day moving average are right in the same zone. So that's going to be our next level of resistance. And above that is about 1838, and that is our 50-day moving average. Now, the beautiful thing, if you look at that chart, it shows you that we've recently had a golden cross in which the 50-day crossed above the 200-day, and that's significant.
All right, so strong support for gold would be at about 1791. I think gold is getting tested today. Last I checked, I saw it at 1799. Gary, he's on it. And resistance levels for gold are showing at a Fibonacci retracement level of 38.2%. It's at about 1826, and the 200-day moving average is at 1828, or at the time of that recording. This could point to very strong resistance levels for gold, and we are indeed seeing that. We are seeing these levels being resistance levels for gold. And add on to that, where the 50-day moving average, a short-term indicator, is showing 1838, a bit better. So we have multiple values showing us a pretty good degree of resistance for gold in the short term. But in this, we also had a golden cross. So what's a golden cross? A golden cross occurs when the short-term moving average, which was the 50-day, crosses over a major long-term moving average, which was the 200-day moving average. And this is to the upside, and usually it's interpreted by analysts and traders as signaling a definitive upward turn in a market. So perhaps if we can get through those resistance levels on gold, we're going to see gold move up quite a bit after that. So again, hey, not financial advice or anything like that, professional or otherwise. It's just letting you know my opinion here. Okay. And then I did ask Gary about silver as well, but for now, the resistance levels, gold short term may be looking pretty good. Put it that way, but it does have a bit of resistance right now, according to Gary Wagner during that interview. So what about silver? Gary, short term, silver, looking at the tail end on this chart being the month of June and into July on this daily chart here, does silver in the short term look to be running out of steam?
Silver has been caught in a sideways band. I've been looking at major support at about 25.11, roughly there.
Okay, so low 25s, that's where Gary is seeing support for silver, and silver is being tested in the low 25 range again. Silver has been going sideways, and that was why I had asked Gary that question. Some say it's consolidating, expecting an upward movement. And though Gary pretty much nailed it, where he said the support level, for silver does seem to be in that low $25 level, and we're going to take a look at the prices soon. So silver has been around that area, so it may be a good time to keep your finger on the trigger if you're looking to buy silver. As always, this is not financial advice, professional or otherwise. So moving over to Gerald Celente's Trends Journal. Hang in there with me, guys. Let me take a look at a few comments here. Okay, let's see. Yeah, Linda, I tell you what, I haven't had a chance to watch that interview. I did bookmark it in my Twitter bookmark. So I understand it's a pretty good interview. So we yeah, I just want to pass that on to people. If you have a chance, maybe go ahead and take a look at that. So thanks for posting that up. But let's move over quickly to Gerald Celente's Trends Journal, where 4 things stood out, where he talked about gold and silver, oil. We're being erased, guys. We're being erased, and rising rents. So from Gerald Celente's Trends Journal, again, all this is his work from his Trends Journal. We are not taking credit for any of it. All credit to Gerald Celente here. Now, silver at $25 per ounce. It's down $1 from last week. Again, this is from late last week, his release on this Trends Journal. So silver, as we noted, is used in both heavy industrial and high tech. And as forecasts for an economic slowdown persist, commodity prices have taken a sharp hit. And that's because if the economy slows down again, commodities may not be such in demand or such in high demand. The bets that we're going into cryptocurrencies will move back into gold and silver as the predominant safe haven assets. And with our forecast for bear equities market with prices falling 20% or more, the deeper the stock market falls, the higher precious metals will rise. So he's looking for this also relative to cryptocurrencies. Oil, expecting the economy to rapidly expand in the second half of the year and world oil demand to grow by 6.6%. In 2021, OPEC made a deal on Sunday to increase supply. And hang on, guys, let me check something here. Okay, since timing is everything, they did it at the perfectly wrong time since equities began to plunge as fears that the Delta variant would force more lockdowns, thus more lockdowns, slower economic growth, and the less demand for oil. Okay, moving on. You've been erased. Now, during 2021's first quarter, U.S. economic output returned to 99.5% of its level at the end of 2019. But at the same time, U.S. workers put in 4.5% fewer hours, according to the Wall Street Journal. In other words, the shutdown forced companies to automate or streamline processes, operations, and product lines, allowing businesses to achieve pre-crisis results with permanently fewer workers. We're being erased.
It's for you.
Yeah?
You've just been erased.
Yeah, our jobs are being erased. They're being automated. So I tell you, jobs are going to be a premium. If you can find them, you may want to seriously consider going after them. Rising rents. Across the U.S., the monthly rent for an apartment has increased an average of 7.5% this year, three times the typical annual bump as demand is surging, apartments.com reported. And analysts expect rents to continue climbing into next year, due largely to three factors, according to the Washington Post. Young adults are reestablishing their own homes and staying with friends or family during the 2020s crisis. The people who enjoy city life are returning to urban centers, although many are relocating to lower cost areas. And older adults whose children have left home are cashing out of their owned houses and renting instead. Now, rents for houses and apartments combined are rising at the quickest pace. Get this now, at the quickest pace since 2006 housing crisis, according to Zillow. So it looks like all things, it's like a boomerang. Everything is starting to come back, and we are going to have to account for these things. We are going to have to make our way through these things as best we can. So that was our guest revisit. We're going to head on over to our website here. Let me take a look at a few comments here. Let me see. All right, the jab made you uglier. Okay, tell you what, let's just head on over to the website. Okay, this is our website, silverbullion.com.sg. And we are having storage promotion, 75% off transfer in charges. If you'd like to store with us, and if you are looking to, you have two things you can do. You can either ship your bullion over, or in some cases, it's even cheaper to sell your bullion where you are at, and then go ahead and buy them on this side. Sometimes that's even cheaper or more beneficial. So let's take a quick look here. Okay, silver's getting a bit of an uptick now, 25.36 US dollars per ounce. Gold 18.05. I saw it at 17.99 just a bit earlier. So both metals are getting a little bit of a movement upwards. Nickel, last week we were in the 18,000 range. Today we're at 19,426. So nickel is making a good move again. Again, nickel is one of the primary components, probably next to lithium, the most important piece of the electric vehicle battery. So very, very important as the world moves over to electric vehicles. Nickel does play a huge role in the battery for electric vehicles. This is why we do carry physical nickel. This is not paper ETF nickel, physical nickel. Investor kit, this is free to download. Just go ahead and click it. And you can either look at it on our website or you can download it for yourself and keep it with you. A lot of good info in here. And then storage signups. Again, we always talk about options. I mean, go ahead. Just sign up for that storage account. There's no maintenance fee. And you'll have it here waiting for you if ever you should choose so to use it. Again, no maintenance fee with that. Silver to gold ratio 71.2. We are back above the 70 range. It is a time to buy silver. If you are looking to buy gold and silver, you don't know which one to get. This ratio, it does help to make people make decisions on which to get. And in this case right now, it is a time to buy silver. So again, we're above 70. We were doing good for a while, but now back above 70, which is better for silver, actually. I mean, for those looking to buy silver. Featured products, 1,000 ounce LBMA bars, 100 gram gold bars, 1 ounce 2021 popular, very popular Canadian maple leaves. Britannias are doing good. Again, nickel. This is where you can get nickel. Platinum. Platinum is doing very good as well. Kilogram gold bars. And again, this is always a topic for discussion. The 1,000 ounce LBMA bars. We do have 324 in our vault ready for you to buy and own. We do have 5 bars in the shop. In fact, I had to work at the shop this past Saturday, and I did see one of you guys. I won't mention your name. I saw you come in with that trolley and load up 1,000 ounce bar. Good for you. It's a heavy, heavy, heavy bar. So if you are strong enough, come on down to the shop and pick one up, or you can go ahead and store it in the vault. And when you do store it in the vault, it is yours. You do own it. You absolutely do own it 100%. The serial number is on the bar. That serial number belongs to you. If you want to do this storing in the vault, you need to sign up as a silver bullion user, where you would create a personal account if it's just you, a joint account, perhaps if it's you and your spouse, a trust account, joint account with a minor, business account, or perhaps you're looking at some type of a precious metals IRA. So the best thing to do is go ahead and email us at sales@silverbullion.com.sg and talk to us about your situation, what you'd like to do, and the solution that we would have for you. And in the instance of a personal account, very, very simple to do. All you need is to fill out the application and go ahead and show us some identification. A lot of times people will use a passport as ID, your country of nationality, your preferred currency. And then, of course, you would want to select us, YouTube, SBTV, as your reference how you found out about us. And again, be sure to tick this box here, encrypted secure notification. What that means is if we have to email you, you'll simply get an email that says you have a message from us. Nothing written in the body for Google and Yahoo and Hotmail and all of those guys to see. You just simply log into your account and then you'll go ahead and see the message. So privacy is extremely, extremely important. So hope to see some of you guys sign up, and we'll see what we can do for you. Moving over to Twitter, some things I bookmarked here. This goes from bad to worse on a daily basis. Why indeed? How about because she asked? Basically, what this is, for me, this is pretty concerning. Got nothing to do with politics. Just to say, this is the state of where we are at right now. So I'll go ahead and
individuals who may. Most are asymptomatic if they are individuals who are vaccinated who get the virus. We are in a different place in terms of the impact of individuals who may have, as you said, breakthrough cases.
Why not just provide the number? Are you trying to hide something?
No, but why do you need to have that information?
Okay, so that was the part where a reporter asked, "Why can't you just give us a number?" And from the government, why do you need to know? Basically, why do you need to know? This is where we are at. Uh, Embarrassing. It's a shame. Nothing to do with who's president or anything like that. It's just got to do with where we are as far as what we mean to governments. Governments don't think too highly of us people anymore who put them in office. From CNBC, Americans may need to work longer, take more investment risks, and to afford retirement. BlackRock CEO Fink says so. Let me just go ahead and get there real quick. Let me put it here. I'll go ahead and play what he had to say.
Hey, Larry, in the past, you've spoken passionately about getting everyone, all the boomer people that are getting close to retirement age, the ability to retire, and that we're just not prepared. There's been recent articles written about the Fed and how everything the Fed is doing with well intentions is actually just killing savers, and the people that are doing well, given the Fed's action, are people that own assets, and income inequality is getting worse, and everybody that owns a house, everybody that owns stocks, everybody that has all these things are getting marked up, but not for the right reasons, not because of an underlying organic type growth, and savers are continuing to be just slammed. I mean, are you not worried about the Fed's action at this point? I don't see how they get out. You just said that inflation's probably going to be higher. They're stuck in this box where they can't really stop, and the more they don't stop, the more savers get hurt. So what's the answer long term?
Joe, I think you framed it really well, and I've been talking about that for years, about the silent crisis of a retirement. And unquestionably, as central banks keep rates low or negative in Europe, the savers are getting slammed. And you're absolutely correct. Asset owners are the biggest beneficiaries of monetary policy. And this is why I think a year ago, 2 years ago, I talked about we need a more fiscal stimulus and maybe less monetary stimulus. And so there is no question savers are being slammed, using your word, and that is a persistent problem, and that will remain a bigger problem. Much of this has to do with, this is one of the reasons why we're seeing many of the savers are now more confused. And I think some of them are now finally entering in equities and other asset categories as a part of it. I think, as you remember, on your show a number of years ago, I was asked, what should be your asset allocation? I've always said 100% in equities. Not that I predicted where monetary policy will be, but unquestionably, we are going to have to address what I would call the silent crisis of retirement. People are going to have to, unfortunately, if whether they like it or not, they may have to work longer because they're not earning the same returns on their savings. On the other hand, if you had a balanced portfolio over the last year, you've done quite well. You may have been being hurt on your bond or cash allocation, but in your equity allocation, you've done quite well. And for those who own homes, obviously, they've been a big beneficiary of rising asset prices.
Okay, let me go ahead and clear this out here, and we'll get back to our Twitter bookmark. So, savers, if you're saving, you haven't. It's being getting eaten away. Let's just put it that way. It's a rough time for savers right now. Let's see what else is out there. Some things that I bookmarked. Okay, hang on. This one here. It's not me. That's not my hand. I can tell you that. Vincent, is that your hand? Vincent? Somebody has a lot of gold coins out there. It's definitely not me. So again, this is someone who does understand gold and silver, that's for sure. As someone mentioned before, Greg Hunter, financial system has come to an end. I guess this is his interview with Martin Armstrong. This is why the greatest financial crisis in human history, and people don't understand what is going on. So you may want to make your way over to USA Watchdog and take a look at what Greg Hunter and Martin Armstrong has to say. Let's see. Steve St. Angelo, SRS Rocco report why silver is the major investment of the future. of the future, and that is because of the green economies that are coming up. Financial system had massive debt heading to epic meltdown. U.S. financial system is heading towards an epic meltdown. Go ahead and make your way over to srsrockoreport.com and get the info from Steve. Michael Sayer, here you are. Despite a clear supermajority of the host country feeling it's best to not have the Olympics now, they do it anyway. A reminder that governments no longer care about the opinions of their people, but instead care about what makes them money and keeps them in power. And this is about the Olympics. And, well, there are differences of opinion if it should have been held or if it should not have been held. The people have different opinions from the government. And, of course, the IOC, or International Olympic Committee. Let's see what else is out there. Stubbornly high inflation. Imagine that. We see Russia. They raised their key rate to 6.5%. Okay, so Russia is already raising rates. Dave Cullum, lockdowns were functionally a bear raid on small businesses by large corporations. And he makes a bold statement here. Show me, if any of you guys out there can as well, show me an S&P 500 company that boarded up. Now ponder how many have expanded customer base by cannibalizing small businesses. So Dave makes a pretty good point here. Hey, if any of you guys know of an S&P company, go ahead and then take a shot and let us know. Rob Keats, Dems could be killing the economy. I'm just going to say government. Government could be killing the economy. There's no point in trying to split left and right already at this point. They all are accountable for this. It doesn't matter anymore. Okay, so according to Rob Keats and let me see, I believe this is, Druckenmiller, government basically is killing the economy. Thomas Mullinen, this is a free one here, so go ahead and follow Thomas at MT Mullinen, and he written up an article about the repo market and the reverse repo market. It's a pretty good article helping to explain that. And let's see, Vegas workers, okay, put your mask back on. And then lastly here, it takes quite a bit. According to SRS Rocco, Newmont consumed 51 million gallons of diesel fuel to produce 1.2 million ounces of gold as its low-grade Penasquito and Boddington mines for those mines in 2020. Newmont consumed 43 gallons of diesel for each ounce of gold produced. That's quite a ratio, quite a ratio. So let me see if anything else is out there. I believe that's it. One tweet from Judy Shelton, very thorough, insightful analysis. Explains the impact of inflation stemming from constricted supply, which cuts output and erodes purchasing power. And he cites Atlanta Fed on wage growth, but adjusted for inflation, wages are down 2%. So those are some things going on at Twitter, or on Twitter. That was a quick look at Twitter. A lot of interesting stuff out there on Twitter. I do hope you folks have some time to really read through what people are saying. It's very interesting. Mr. Nguyen, thank you for clarifying the thing with that tweet. There were there was other information that she needed to get, which was why she had asked that question. So fair is fair. So okay, thank you for letting us know that. Take a quick look at a few comments here before we get into the topic of the day. Our government is yeah, and it's gotten to a point, it doesn't matter, left, right, up, down, zigzag, whatever it is, doesn't matter anymore. Governments just don't seem to want to listen to the people anymore. So anyway, let's see what else is out there. Let's see. Yeah, that's a good point there, Ricky. Left, right, two different legs moving the same thing forward. That's pretty much it. And again, that's why, like I say, when you really see what's happening, take a step back and really see what's happening. We need options. You are going to need options, including options of things like stores of wealth, assets outside of the current financial system. And it's hugely important that we understand this. A few more comments here. Yeah, 43 gallons of diesel just to get an ounce. That's quite a bit. Quite a bit. Quite a bit. Okay, Casey Willis. Okay, so it's not just the U.S., Canada, Canada as well. All right, that's why we're in NAFTA, right? We're all going to. We have a treaty. If one's going to be a disgrace, the other has to be a disgrace, right? Okay, nice one there. Let's see. Okay, all right. So I tell you what, let's just move on to the topic of the day here. Time's clicking here, and that is going to be the upcoming debt ceiling. And next time we meet, as I've said earlier, the debt ceiling deadline will have come and gone. Debt ceiling has been in the news recently when Janet Yellen fanned the flames where Congress must act on the looming debt ceiling deadline. Here we go.
As you well know, the debt ceiling is currently suspended until July 31st, just end of next month. After that point, the Treasury Department can prevent default for a brief period of time with its so-called extraordinary measures, but Congress must ultimately raise the debt ceiling to prevent a default of the full faith and credit of the United States. There are murmurings that some members of the Senate may want to try to use this as a political cudgel to extract concessions on other things. Could you speak briefly to the consequences of a default on our national debt, or even creating uncertainty around whether or not we're going to make good on our full faith and credit?
I think defaulting on the national debt should be regarded as unthinkable. Failing to increase the debt limit would have absolutely catastrophic economic consequences. It would be utterly unprecedented in American history for the United States government to default on its legal obligations.
Okay, utterly catastrophic if the U.S. should default on its legal obligations. Okay, the debt ceiling. So what is it? Does it really mean anything? Because this really just seems like a political ping pong every few years or so. Does it really mean anything? So we'll take a look at a few clips about the debt ceiling.
With unfortunate regularity, the U.S. debt ceiling will again emerge as a political football in August in Washington, D.C. Back in 2019, after the large corporate tax cut of December 2017, U.S. federal government revenues were significantly lagging behind expenses, and the debt ceiling needed to be raised. A creative, bipartisan political solution was crafted. The debt ceiling was not raised, but suspended until July 31, 2021. The deadline has now arrived, with the national debt at $28 trillion, miles above the old limit of $22 trillion. Consensus is that the debt ceiling will be raised to avoid a U.S. government default, even if there's a short, partial government shutdown while the deal is negotiated. Bond and equity markets will be looking to see if the debt ceiling is merely suspended again with another deadline, or whether the debt ceiling is officially raised. Either way, debt ceiling theater typically raises both bond and equity volatility until a compromise is reached.
Yeah, let's put our collective brains together here and let's suspend it. That's what we'll do. Let's suspend it. Come on, guys. I mean, we've put you in there to be responsible for us, to act for us, and the best you can come up with is let's suspend it. We'll see what happens this time around. The middle class is just getting chewed apart here. But let's take another look at one more look at a different clip about the debt ceiling.
No Congress in 224 years of American history has allowed our country to default, and it's my sincere hope that this Congress will not be the first.
There's been a ton of talk about what will happen if the United States hits the debt ceiling. So what is the debt ceiling? The debt ceiling is a limit on how much the government can borrow. Congress has the power of the purse. It tells the executive branch how much to spend and how much it can expect to receive in taxes. When Treasury faces a deficit, it sells bonds to make up the difference. The debt ceiling is a cap, set by Congress, on the value of those bonds. Right now, we are close to hitting the debt ceiling, which means the Treasury Department could lose the ability to pay the nation's bills.
If we don't raise the debt ceiling, we're deadbeats.
Here's the math that has economists worried. The Treasury would likely miss about 30% of the payments it makes daily. Payments to state governments, Social Security recipients, bondholders, and more. That's bad enough, but what has people really worried is the effect on world markets. If Treasury begins to miss payments, it's what is called a sovereign default.
It would mean massive disruption the world over, and we would be at risk of tipping yet again into recession.
World markets will be watching closely. Even the threat of a sovereign default could mean worldwide crisis. Investors who have traditionally thought of the United States as a safe harbor could panic. Some analysts fear that a sovereign default might well be worse than when Lehman Brothers collapsed in 2008.
Stocks all around the world are tanking.
It's an historic day with Wall Street shaken to its very foundation today.
Now, Treasury could in theory prioritize payments to bondholders, but that means stiffing federal workers and local governments and might not even be legal. It's all uncharted waters. So what does this mean for the average American? Before you go out and buy cartons of cigarettes and prepare for a barter economy, consider that Congress has not allowed the Treasury to default in more than 200 years. Investors have gotten used to the idea that Congress waits until the last minute to solve this problem, which is why investors are not panicking, at least yet.
Okay, so are there consequences to not making payments on time? Absolutely. Is anyone truly worried? No, they know it's just a game that they have to go through every couple of years or so. But with the power of the printing press at their disposal, meaning your money, Congress will just turn this into another show to push and pull voters this way, that way, this way, that way. And however for you and me, though, this has very real and very grave consequences. So one more take from Janet Yellen. Bear with me now.
I believe it would precipitate a financial crisis. It would threaten the jobs and savings of Americans, and at a time when we're still recovering from the COVID pandemic. I would plead with Congress simply to protect the full faith and credit of the United States by acting to raise or suspend the debt limit as soon as possible. Preferably, you mentioned July 31st is the date that the debt limit suspension ends, and I would really urge that the debt limit be raised or suspended again before that. And, this is not about authorizing additional spending. This is simply about the government paying its bills, making good on the payments that are implied by the tax and spending decisions that Congress has made.
All right, so she wants to raise the debt ceiling. She's concerned. This is the same lady that said we will never see another crisis in our lifetimes, right? Okay. And notice what she said. She said something along the lines of raising or suspending the debt ceiling is not about, or for new expenditures. This is already stuff we owe. This isn't about funding some project down the road or anything like that. It's about money spent, and it's about generations of money that has been spent. This is about paying the bills. This is about money spent. And let's take one more look at another explanation. Okay, hang in there, guys. Hang in there.
The federal debt ceiling. It's a looming catastrophe. It's a bargaining lever. It's a crisis averted. It seems like a never-ending cycle. So what is the federal debt ceiling anyway, and why should you care about it? Let's start with how it works. The government spends more money than it takes in. It's done this off and on since the country was founded. But now it's doing it more than ever. In each of the past 4 years, it has spent over $1 trillion more than it took in. In February of this year, it is projected to collect about $215 billion in revenues and pay out $460 billion. The government borrows to make up the difference by selling bonds to investors around the world. Nearly half of that debt is now held by foreigners, much of it by Japan and China. Each month that the government spends more than it brings in, that is, each month that the government runs a deficit, it has to borrow. The sum of all this borrowing is the federal debt. It's been growing, both in dollars and measured against the size of the economy. Until World War I, Congress had to vote each time the Treasury needed to borrow money. To give the Treasury more flexibility, Congress switched to setting a ceiling on the debt in 1917. When the debt bumps up against that limit, Congress, often with a lot of shouting and bargaining, votes to lift the ceiling. And that is where we are now. The government hit the $16.4 trillion federal debt ceiling on December 31st, so Congress suspended the ceiling, allowing the Treasury to borrow what it needs, but only through May 19th. Well, you have to understand the debt ceiling is a strange thing. First, Congress votes to spend money the government doesn't have. Then it votes a second time to allow Treasury to borrow that money so it can spend. Refusing to raise the debt ceiling does not cut spending. It's like refusing to pay a credit card bill for stuff you've already bought. But because failure to raise the debt limit could be so devastating, Congress often does use it to force the president to do things he's reluctant to do. Nobody really knows. The Treasury hasn't been in precisely this position before. But here are some rough guesses. When the Treasury faced similar circumstances back in 2011, it contemplated paying as many bills as it could each day with the cash it had on hand, delaying payment on the rest. Bills would be paid basically in the order in which they arrived. The longer the delay in raising the debt ceiling, the more bills would pile up. Physicians who rely on Medicare payments to make payroll, seniors who pay rent with Social Security benefits, or soldiers waiting for paychecks would be forced to make do without their money for some time. Another option would be for the Treasury to prioritize payments, choose some bills to pay on time and others to delay. But it's unclear whether this is legal or logistically possible, given the volume of bills the Treasury receives each day. Nor is it clear whether the Treasury could or would pay interest on the national debt before paying everyone else. Any delays in paying interest would endanger the government's credit rating and shake confidence around the world in the ability of the U.S. government to manage its finances. That could lead investors to demand higher interest rates for U.S. Treasury bonds, which would cost American taxpayers billions of dollars over time. Those are the stakes. And as the debt continues to rise, Washington faces a decision. Will it come to an agreement on taxes and spending? Will it actually do something to slow the buildup of debt? Or will the debt ceiling come back into the headlines, and with it the accompanying fear that the U.S. government won't be able to pay its bills?
Okay, so obviously this was a bit dated, but it's still the same. It's still the same. It happens the same way, same time, just a different year. So didn't matter. This could have been 20 years old. It still would have been the same thing. But the point is they can affect every man, woman, and child in the U.S. and even overseas. Every equities investor, every bond holder. The very dangerous thing in all of this is how our government and the people we put in government seemingly don't care. Now, what does history say? This is an article from a few years back, but it kind of it drives a point for us to understand. Let me make this a bit larger here, so both you and I can see it. Why soldiers won't get paid during a shutdown, but Congress will. Now let that sink in. Why soldiers won't get paid during a shutdown, but Congress will. Okay, that already should get a lot of you guys boiling. It's quickly becoming the easiest way to frame who'll be hurt the most. All right, here we go. Let me just point out this article was back in 2011. 2011, like I said, it doesn't matter. It's the same thing every time. Doesn't matter what year. If lawmakers are unable to pass a budget before the April 8th deadline, soldiers will stop getting their paychecks. Meanwhile, Obama, Speaker Boehner, and the rest of our federally elected representatives will continue to get paid. The comparison is quickly becoming the easiest way to frame the point of how people who are responsible for averting a government shutdown will be shielded from its impact. Thus, headlines like Boehner to be paid as soldiers wait if government closes, which is running on Juliana Goldman's Bloomberg report. I mean, I think I can just end it there, really. Hey, elected officials still get paid, you and me don't. Fair. We put these people in office and they're just not responsible to us, not responsible to the nation, not responsible to the nations of the world, whether it be bondholders, whether it be trade balances and things like that. There's a lot riding on this. And, with the printing press, they'll just go ahead and if need be, raise the debt ceiling, print more money, and kick the can down the road. Eventually, though, people are going to get tired of the U.S. dollar. They already are. I can tell you, being outside the U.S., a lot of countries are already tired of the U.S. dollar. Okay, so at some point, everyone everywhere needs to understand that politicians, they're feasting. They're feasting while giving you and me, even the world, crumbs when they feel like it. And this is why it's so important to, as Gerald Celente says, think for yourself. Think for yourself. You need to protect yourself, your money, your wealth. So now I want to move on. I know a lot of you guys are familiar with this. Want to take a look at the U.S. debt clock. Okay, let's take a quick look at the U.S. debt clock. And I'm going to show you the debt clock from a couple years back. So luckily we did a live stream on this, so we do have it recorded. But we're at 28 trillion right now. Okay, 28 trillion. So what happens is here, the tax revenue, this is what the government takes in. My understanding of it, the government takes in this amount, but this is what they spent. Okay, so they spent more than they took in, and this leads to the deficit here. And this happens time and time again. And then we are forced to raise our debt ceiling. Now, I want you to notice some things here with the trade balance. Trade deficit going up. Okay, 37, 38, 40, 42, 44, 40. It's going up. Trade deficit going up. Trade deficit with the biggest trading partner, China, going up. 36, 37, 38, 39, 40. Okay, trade deficit with China going up. Imported oil, 7, 8, 9, 10, 11, 12, 13, going up. Okay, so this number is going up. Everything is going up, including U.S. debt held by foreign countries. This would be like our bonds and things like that. So all of these numbers are going up. I know you folks are interested here in this part. The dollar to silver ratio now is 3,054 an ounce. Dollar to gold ratio, 21,500 per ounce. So these numbers they're getting up there. They're pretty staggering. Okay, so there's probably no way this debt will ever be paid back. And we'll go ahead and take a look at that debt clock again. But there's no way that the debt ceiling can be lowered. If it's lowered, Stephen T, get ready. If the debt ceiling's lowered, you're going to come on and host the live stream. But there's no way it can be lowered. And there's probably no way unfunded liabilities can ever be paid. We'll go back. We'll take a quick look at that. But one more clip on this debt ceiling. Hang in there.
The U.S. government is the largest spender on earth, trillions of dollars a year. But the U.S. doesn't bring in as much as it spends. So each year we borrow the difference and we keep adding to our debt, also the largest on earth. The debt limit says borrowing must go no higher than here. The problem? In reality, the spending was already in motion. Workers' salaries, weapons delivered, buildings built, programs underway. If we hit the debt limit, the spending has already happened, but it would just mean the U.S. can't pay some of the bills that are due, including loan payments, leading to default. And that would be dramatic.
So this debt ceiling thing is routine or the end of the world?
Both. Okay, that's it. Thanks, everybody.
What could happen if we don't raise the debt limit? Well, the U.S. would not be able to pay all of its bills, and that could include paying its loans. Defaulting on U.S. loans would have dire consequences, changing our nation's good credit rating and sending out a financial wave that could raise mortgage and other rates. That was not the idea at the start. Debt limits began in World War I in an effort to give Treasury more power. The debt limit let Treasury take on loans up to a certain level, and that level was initially set relatively high above debt needs. After World War II, the limits became tighter, and Congress had to vote nearly every year to raise them. Then came the 21st century. Starting in 2001, a jump in spending and in deficits sparked years of debt concern. Standoffs in Congress over the debt ceiling became so regular, they were parodied.
Questions for Mr. Ryan. Would you vote to raise the debt ceiling?
Well, as the late, great Lionel Richie once said, oh, what a feeling
I am dancing on the debt ceiling.
So that all brings us to now. And one other important point about how the debt ceiling works: when exactly do we hit it? How do we know? This gets me to one of my favorite debt ceiling facts. The national debt is tracked every day to the penny by a small group of Treasury workers in Parkersburg, West Virginia. These workers in West Virginia, when we hit the debt ceiling, have a very tricky job. They move things around to keep us technically under the debt limit, holding off on some investments, waiting to issue some internal debt. These are called extraordinary measures. Sometimes Treasury can keep the U.S. hovering right at the debt limit for many months using this fiscal sleight of hand. But of course, it is just a delay tactic until Congress and the president agree to push up the debt limit again. So one conclusion: we have a new inevitable. To death and taxes, now add the U.S. continually bumping up against its debt ceiling.
Okay, so where are we? Okay, hang on, let me just scroll through this real quick. Yes, okay, here we are. Nothing new under the sun, guys. Nothing new under the sun, but I want to go back and take a look at the debt clock. I believe this was 2 years ago. This is when we did a live stream on the debt clock. And so luckily we had some of these things recorded. See, was actually something new under the sun. So pay attention to the top left U.S. national debt number. This was recorded from a live stream a couple years back. What they're spending. So they're taking in this 3+ trillion. Looks like a trillion, billion, million. Okay. Yeah. So they're taking in 3.5 trillion, spending 4.5 trillion. And so here we have a budget deficit of over 1 trillion, slightly over 1 trillion. Okay, so this is pretty much just to say that back then we were at 23 trillion. We're about $5 trillion higher than we were just a year or two ago. So this is no joke. This debt is continuing to rise at a rapid pace. Now, remember I showed you on the debt clock when it came to our trade balances, how we're going up. The trade balance with China, we're owing more money. We're owing more for oil. Our treasuries, of course, our treasuries, but when it comes to trade balances, they're going up. Remember, I showed you that. Now, take a look at this just from a year or two ago. When you look at the trade balance portion, U.S. debt held by foreign countries, it's going up. Okay, so more countries, they are buying U.S. debt. Why are they buying U.S. debt? Well, I guess when you look at yields, a lot of other places are zero to negative territory. And I guess, for one reason, perhaps, this is where countries are still hanging on and taking on U.S. debt. The other interesting part, which rarely gets any news time, is when you look at imported oil from OPEC, it's going down. Okay, the U.S. debt is going down as far as imported oil to OPEC. U.S. imported oil is going down. Okay, you can see this number here. It's also going down. And these things rarely get reported. The trade deficit with China, the trade deal was a big deal. You look at it, it's going down. So again, some of these numbers are actually reversing. It's not, where in every category, the depth is getting greater and greater. In some categories, it's actually getting less. And overall, when you look at the U.S. trade deficit, that number as well is going down. Okay, so essentially, hang on there. What happened was we had numbers that were going down, and now we have numbers that were going up. Again, if we take a look at those sets of numbers here, I'll come back here and I will look at the trade balance portion. Let me blow it up a bit so we can get a better look at it. So where these numbers were going down, they are actually going back up. Imported oil going back up. We know what happened with the pipeline. Trade deficit with China going back up. Again, the overall trade deficit going back up. So where these numbers were going down just a short year or two ago, they are heading up, going up again. All right, so let me take a look at, see if I can move this over to the Again, the metal section here, dollar to silver ratio now 3,054 an ounce. Dollar to gold ratio, 21,000 an ounce. Paper, I know you guys are going to like this. Paper to silver gold ratio, 186 to 1. Paper to gold ratio, 85 to 1. And dollar to crypto ratio, this was a new thing from back then, 1483 to 1. But you look at the paper ratios, 186 paper ounces of silver to a physical ounce, 186 to 1. Paper gold ounces to a physical ounce of gold, 85.72 to 1. So you can see a lot of things here. You just really got to kind of wonder once again, what is going on. So here's our debt, 28 trillion. So this debt ceiling, well, what do they really intend to do? Just raise the debt ceiling once again, and these numbers will continue to grow. Let me take a look at a few comments here. Okay, Celente Jim, I guess Gerald Celente. Yeah, I think he's going to be coming up soon. We'll be interviewing him, I think within a couple weeks or so. So look forward to that one there. Let me see what else is out there. Let me see. Okay, well, changing numbers, just rearranging the deck chairs on the Titanic. True, very, very true. Okay, let me see. Let me take a look at one thing here. Maybe I had missed it. Hang on now. I just want to take a quick look at the debt clock for one more thing. I'm trying to look for the if they have it, the actual number for the metal coming out of the ground and the silver to gold ratio. I don't see it though. Okay, I don't see it. So again, when you look at the Fed's numbers on total public debt, this is something else that I want to show you guys as well. The numbers on total public debt back in 2019, when the repo market exploded, things were beginning to sort of unravel. And when you take a look at it today, this is what it was back then. Sorry about that. You can see just at the edge of 2019, 2020, it's just starting to tick upwards after this short plateau. We were at about 22, trillion as far as total public debt. And I want to show you this where we are today. Okay, so back then we were about at 22 trillion. Here we are today. This was that short little plateau back then. Okay, that 22, 23 trillion number. And here we are today, above 28 trillion. This is total public debt. This is debt that belongs to you and me if you are a U.S. citizen. We have a lot of public debt. This isn't even the unfunded liabilities yet, I do not believe. So you can see how this number here is growing. Okay, it's just astronomical. It's phenomenal what's happening there. Without policies to rebuild, manufacture, retool, etc., you don't have anything to sell. You don't have anything to sell to make money to bring these things down. And with nothing to sell, again, you can't make any money unless you have friends willing to let you borrow money. That's going to be your source of income already. Tax revenues, selling treasuries, trying to get your friends to borrow money from you. Hey, can I borrow some money? Or unless your legislators submit to MMT, UBI, combination of both. Do we understand where we are at this point in time? And do we understand we still do have time? Opportunities are going to come, square things up, and aggressively find them. You're going to have to aggressively find them. So that's going to wrap up the topic of the day. I know you guys are pretty active right now in the comment section. So let me take a look at a few of them before we head over to a short commentary. There you go. MX Old Timer 4. What did you get for your share of this debt? If you were saving money, you're losing right now. You're losing money right now because of fiscal monetary policies, one or the other. You are losing money right now. What really did you get for it? James Richter, sub 10 to 1 silver gold ratio. I pray. I tell you what, that would be awesome. I know there are some guys that Francis Hunt interviewed. He was saying single digit silver to gold ratio, that would be a relief for a lot of us. That would be great news for a lot of us. What else is out there? Okay, Florida Dex, stop believing in this fake system. I think, if I could add to that, believe more in yourself. Believe what you think. After you take everything in and you start to make sense of it all, believe in yourself. Okay, believe in yourself, because in the end, it's really the things that you do are going to matter the most. So, taking the information, believe in whatever your conclusion is, and go for it. Keep moving forward, step forward, one step at a time. All right, so we'll head on over to commentary before we wrap up. If your credit starts going bad, your friend you borrow from will want interest, right? They're going to tell you, hey, if I'm going to loan you money, you got to pay me back a little bit more now because you're a risky guy. I need more money. You just might not pay me back. I'm taking a risk here. Now, worse yet, if I loaned you money and inflation sets in, the purchasing power of the money I lent you becomes worth less and less than when I had loaned it to you. So again, we also have this component of inflation that is coming in. So let's say they raise the debt ceiling, they get more money. When inflation sets in, that money doesn't go as far. Going to have to go deeper in debt. Unless you have things, stores of wealth outside of the fiat funny money system, you're going to lose. I'm going to lose. You're going to lose. We all are going to lose. In the 2 years since the debt ceiling was suspended, the U.S. has turned things around, but in the wrong direction. We're going back in the wrong direction, and that's going to affect the whole world as well. Debt clock is showing us this, right? So things, they will not get better unless you make it better. I mean, eventually they will get better, but for who? I'm not willing to find out for who and when. I'm going to do what I can to make things better today or tomorrow on my own, in my own way. And I hope you all will do the same by understanding what's really going on. So that's going to end the commentary section. Again, I'll take a few look at some of your comments before we head out. Just take in as much news as you can, go through it, and try and figure out how you can use things to your advantage and put you in a better position, because it's really what it's about right now. Take a look at a few comments. Good humor, man. Debt ceiling has always been a show. Absolutely. It has always been breached and is imaginary, like everything else in our society. It's kind of sad to think that, all these things are imaginary and whatnot, but, you got to do what you need to do. Take care of yourself, your friends, your family. And, we are in strange times indeed. MM126, freedom, absolutely. We may all have definitions of what freedom is, what enough freedom is. It's different all over the world. This I've come to know. But we do need freedom, some sort of freedom, however you define it, however you scale it. We all need freedom in some way, somehow we do need it. JM, paper ceiling, absolutely. Jim Flynn, I wouldn't doubt it. Record highs again, about to come up. Who knows? Let's go more into debt, raise the debt ceiling. But hey, let's raise the levels of the stock market. Completely makes sense, right? Okay, so all right. Carrie Ellen Wilder, yeah, thank you. Appreciate that. And again, if I'm wrong, if they do lower the debt ceiling, you guys are going to see my colleague Stephen T. He's going to be here hosting the show if the debt ceiling goes down. So if it goes down, something's up really. So Stephen T, get ready. You never know. Vincent, get ready. Might be you as well. Who knows? But as always, guys, be a blessing. We got to try and be a blessing, not a burden. There's going to be a whole lot of burdens out there. People who weren't necessarily, taking us seriously when we were trying to tell them what's going on. So be patient. Be patient. Be a blessing. Take things one step at a time, one day at a time. Find happiness. Find peace. Find happiness. And just saddle up for what's coming ahead, and silver up as well. And I'll see you next week. Unless the debt ceiling is actually lowered, then you're going to see Stephen T. Just kidding. I'll see you guys next week. You guys take care.